The 150K SaaS takeover. Everyone told him to stick with his safe corporate job, but David Chen saw something in a struggling software company that others missed, and his analytical mind was about to turn $150,000 into a passive income machine, generating $400,000 annually. By the end of this story, you'll see exactly how David used technical due diligence to spot hidden value in a SaaS business, and the systematic approach that transformed a failing startup into a profitable acquisition target. The corporate code monkey David Chen stared at his computer screen, watching another pointless meeting invitation pop up in his calendar. As a senior software engineer at Megacorp, he made $95,000 a year writing code that would probably never see the light of day. David was good at what he did. Really good. He could analyze complex systems, identify bottlenecks, and architect solutions that scaled efficiently. But working at a 10,000-person company meant his ideas got buried in bureaucracy and committee reviews. The irony wasn't lost on him. David spent his days optimizing software systems for a company that couldn't optimize its own decision-making process. Late one Friday evening, after another week of meetings about meetings, David found himself browsing a business-for-sale website. He wasn't seriously looking to buy anything, just curious about what kinds of businesses were out there. That's when he saw the listing that changed everything. SaaS business, project management software, 240,000 ARR, owner burnout. The listing was sparse on details, but something about it caught David's attention. Annual recurring revenue of $240,000 wasn't huge, but it was real money. And as someone who'd spent 5 years building project management tools for corporate clients, David knew this market intimately. The asking price was $150,000, less than David's annual salary. For a software business generating $240,000 in recurring revenue, that seemed incredibly low. David's analytical mind started working. What wasn't the listing telling him? The struggling founder, David, called the number Monday morning. The voice that answered sounded exhausted. "Jennifer Walsh," she said, "you're calling about TaskFlow Pro?" Jennifer had founded TaskFlow Pro 3 years earlier after getting frustrated with existing project management tools while running a marketing agency. She'd built exactly what she needed: simple, intuitive software for small teams who found tools like Monday.com too complex and expensive. The business had grown to 800 paying customers, each paying an average of $25 monthly. That generated $240,000 in annual recurring revenue. Not bad for a solo founder. But Jennifer was burning out. Customer support consumed most of her time. Feature requests kept piling up. Larger competitors were starting to offer similar functionality. She'd spent the last year just trying to keep the business running instead of growing it. "I'm a marketer, not a developer," Jennifer explained during their first video call. "I can build basic features, but the technical debt is getting overwhelming. The code base needs a complete overhaul, and I don't have the skills to do it." David looked at Jennifer's demo and immediately saw the potential. The software solved a real problem for small teams. The user interface was clean and intuitive. Customer reviews were overwhelmingly positive. But David also saw the problems. The architecture was inefficient. The database queries were slow. The code looked like it was held together with digital duct tape. To Jennifer, these were insurmountable technical challenges. To David, they were exactly the problems he'd spent his career solving. The technical deep dive, David requested access to TaskFlow Pro's codebase for technical due diligence. What he found was a mix of brilliant simplicity and amateur mistakes. Jennifer had built the core functionality elegantly. The user experience was genuinely better than most competitors. But the backend was a mess. Database tables weren't properly indexed. There was no caching layer. The code had no automated tests. David spent 2 weeks analyzing every aspect of the business. He reviewed customer support tickets, analyzed usage patterns, and studied the competitive landscape. The data told a compelling story. TaskFlow Pro had a customer churn rate of only 2.5% monthly. Excellent for a SaaS business. Customer acquisition cost was $45, while lifetime value averaged $800. The business was profitable and growing, just slowly. Most revealing was David's analysis of customer feedback. People loved the software's simplicity, but complained about performance issues and lack of advanced features. These were exactly the problems David could solve. David built financial models projecting different growth scenarios. If he could improve performance and add key features, he estimated revenue could grow to $600,000 annually within 2 years. The technical problems that scared other potential buyers were opportunities for someone with David's background. Analysis paralysis. But David had a problem. His analytical nature, usually an asset, was becoming a liability. He'd built 17 different spreadsheets modeling various scenarios: best case, worst case, most likely case, sensitivity analysis on churn rates, growth rates, competitive impacts, Monte Carlo simulations of customer acquisition costs. David knew exactly how much revenue TaskFlow Pro generated per customer segment. He'd calculated the optimal pricing strategy and identified 12 specific technical improvements that would increase customer satisfaction. But he couldn't make a decision. What if the market shifts toward enterprise customers and small teams become less important? David asked during a call with his mentor, Robert Martinez. What if one of the big players decides to compete directly on price? What if I can't hire developers fast enough to implement all the improvements? Robert, who'd built and sold 2 software companies, listened patiently before responding. David, you're analyzing this to death. Sometimes the best analysis is knowing when to stop analyzing and start acting. Robert shared something that hit David hard. I've seen brilliant engineers miss great opportunities because they wanted perfect information before making decisions. Business isn't about having perfect data. It's about making good decisions with incomplete information. David realized his corporate job had trained him to avoid risk rather than evaluate it. Every decision went through committees and required extensive documentation. But business ownership required making decisions with limited information and dealing with consequences. The hidden problems. Just as David was working up the courage to make an offer, his due diligence uncovered problems that made him reconsider everything. Customer satisfaction surveys revealed that 30% of users were somewhat dissatisfied with recent performance issues. David dug deeper and discovered that database problems were causing frequent slowdowns that Jennifer hadn't fully disclosed. Worse, a major competitor had just announced features that directly competed with TaskFlow Pro's core functionality. If they executed well, they could steal significant market share. The technical debt was more extensive than Jennifer had admitted. The code base would need 6 months of full-time work to properly refactor and scale. David's financial projections suddenly looked optimistic. The turnaround would take longer and cost more than he'd calculated. His spreadsheets now showed scenarios where the business could fail completely if customer churn increased or the competitive situation worsened. But David also discovered something Jennifer didn't fully appreciate. TaskFlow Pro's customer data revealed usage patterns that suggested opportunities for premium features and higher-tier pricing. The business was under-monetized. Customers were getting much more value than they were paying for. David's technical analysis identified specific features that could justify 50% price increases for power users. The customer support tickets revealed feature requests that could become paid add-ons. The leap of faith. David scheduled another call with Robert, hoping his mentor could help him work through the decision. I've analyzed this from every possible angle, David said. I know exactly what the problems are and how to fix them. I know what features to build and how to price them. But I also know all the things that could go wrong. Robert asked a simple question that cut through all of David's analysis. If you don't buy this business, what will you be doing in 2 years? David knew the answer. He'd still be at Megacorp, making incremental improvements to software systems, attending pointless meetings, and wishing he'd taken more risks. Robert explained, the difference between successful entrepreneurs and successful employees is that entrepreneurs act despite uncertainty. You've done more due diligence than most people do for million-dollar acquisitions. You understand the risks and you know how to address the problems. That's all you can ask for. David made his decision. He called Jennifer that afternoon. I want to move forward, he said, but I'd like to structure the deal to address some of the risks we've both identified. The creative deal structure. David proposed a deal that addressed Jennifer's need for exit while protecting his downside risk. Instead of paying $150,000 up front, David offered $75,000 at closing and $75,000 over 2 years based on revenue performance. If TaskFlow Pro maintained its current revenue levels, Jennifer would receive the full asking price. If David grew the business, she'd participate in the upside through earn-out payments. The structure gave David working capital to invest in improvements while ensuring Jennifer received fair value for the business she'd built. David also negotiated a 6-month consulting agreement where Jennifer would handle customer support while he focused on technical improvements. This ensured continuity during the transition and freed David to work on high-impact development. The legal structure included non-compete clauses that prevented Jennifer from building competing software while allowing her to return to marketing services. After 3 weeks of negotiations, they signed the agreement on a Tuesday morning in November. The systematic transformation. David approached the TaskFlow Pro acquisition like a software development project, with clear priorities, measurable goals, and systematic execution. Week 1 through 4 focused on stability. David fixed the database performance issues that had been causing customer complaints. He implemented caching systems that improved response times by 60%. Customer satisfaction scores improved immediately. Weeks 5 through 12 addressed technical debt. David refactored the code base, added automated testing, and implemented proper error handling. The software became much more reliable and easier to modify. Months 3 through 6 focused on growth features. David built the premium functionality that customer surveys had requested, advanced reporting, team collaboration tools, and integration with popular business software. David's corporate experience proved invaluable. He knew how to manage software development projects, prioritize features based on customer impact, and implement changes without disrupting existing users. The systematic approach worked. Customer churn dropped to 1.8% monthly as performance improved. New feature launches attracted customers from competitors. Average revenue per user increased 35% as customers upgraded to premium plans. The results: multiplication. 12 months after the acquisition, TaskFlow Pro was generating $380,000 in annual recurring revenue, a 58% increase from David's starting point. The growth came from David's systematic improvements. Better performance reduced churn. New features justified higher prices. Improved customer support generated positive reviews that drove organic growth. David's technical skills had unlocked value that Jennifer couldn't access. Problems that seemed insurmountable to a non-technical founder were straightforward engineering challenges for someone with David's background. The business was now worth approximately $950,000 based on typical SaaS valuation multiples. David's $75,000 initial investment had created over $800,000 in value within 1 year. More importantly, TaskFlow Pro was generating passive income that exceeded David's corporate salary. The business ran with minimal day-to-day involvement, allowing David to focus on strategic improvements and growth initiatives. David left Megacorp 6 months after the acquisition. By year 2, he was earning more from TaskFlow Pro than he'd ever made as an employee, while working fewer hours and having complete control over his decisions. The technical advantage. David's success demonstrates how technical expertise can create significant advantages in software business acquisitions. Technical due diligence reveals opportunities others miss. David could evaluate the code base, identify improvement opportunities, and estimate implementation costs accurately. Non-technical buyers saw only problems. Developer skills reduce operational costs. David could implement improvements himself rather than hiring expensive development teams. This accelerated the turnaround timeline and improved profit margins. Technical founders understand customer needs better. David's experience building project management tools helped him prioritize features that customers actually wanted rather than features that seemed impressive. System thinking applies to business optimization. David approached the business acquisition like debugging software: identify bottlenecks, implement systematic improvements, measure results, and iterate. Technical credibility builds customer trust. Customers appreciated having a technical founder who could understand their complex use cases and build solutions that actually worked. Most importantly, David proved that software engineering skills are highly transferable to business ownership when applied systematically. The scaling vision. 18 months after buying TaskFlow Pro, David acquired a second SaaS business, a customer relationship management tool serving freelancers and consultants. The second acquisition cost $220,000 and generated $350,000 in annual recurring revenue. David applied the same systematic improvement approach that had worked with TaskFlow Pro. By year 3, David's software portfolio was generating over $1.2 million in combined annual revenue. His personal income exceeded $400,000 annually while working fewer hours than his corporate job had required. David's vision extended beyond individual acquisitions. He was building a portfolio of small SaaS businesses, each serving underserved market segments that larger companies ignored. The strategy leveraged David's technical skills while diversifying risk across multiple revenue streams. If one business faced competitive pressure, the others continued generating stable income. David estimates his software portfolio will be worth over $3 million within 5 years, generated from initial investments totaling less than $300,000. The analytical edge. David's story reveals how analytical skills can be applied to business acquisition when balanced with decisive action. Thorough due diligence reduces risk by identifying problems before they become crises. David's technical analysis helped him understand exactly what he was buying and what improvements were needed. Data-driven decision-making improves outcomes. David used customer data, usage analytics, and financial metrics to prioritize improvements that had the highest impact on business value. Systematic approaches accelerate results. David treated the business turnaround like a software project with clear milestones, measurable goals, and systematic execution. Technical expertise creates sustainable competitive advantages. David's ability to implement improvements himself gave him advantages that non-technical competitors couldn't match. Analysis paralysis is overcome by setting decision deadlines and focusing on key variables. David learned to balance thoroughness with action by identifying the most important factors and making decisions based on available information. The struggling SaaS business that Jennifer couldn't scale became the foundation for David's transformation from corporate employee to independent software entrepreneur. If a software engineer could turn analytical skills into acquisition opportunities, what technical expertise do you have that could unlock hidden value in struggling businesses? Subscribe to see more stories about leveraging professional skills for business acquisition success.